Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment for Friday, September 30th. Well, the dollar is opening higher in Europe Friday on yesterday's good U.S. data and apparently some fears over Deutsche Bank. Reports that a couple of hedge funds reduced their positions with the bank apparently have caused some hoarding of dollars in case of a dollar shortage, plus a flight to safety. My view is this story is wildly blown out of proportion, but it could be that investors who remember the liquidity crunch of 2008 will act first and think later. The yen strengthened overnight, even though the CPI data that came out was either as bad or worse than expected. The jobless rate unexpectedly rose, and household spending fell more than expected. The reason is probably that the bad news pushed stock prices down, and dollar-yen tends to move in line with the stock market. As for today's indicators, the month and the quarter ends with a busy day of indicators, mostly in the U.S. though. We already had the UK nationwide house price index. It came in pretty much in line with expectations and didn't have a noticeable impact on the pound. Later today, we get EU-wide CPI. This is rarely a surprise and generally has only a limited impact on the FX market, as its outcome is pretty well telegraphed by the German CPI that came out yesterday. Today's figure is forecast to show an acceleration of the annual inflation rate by 20 basis points, which in fact is in line with the change in the German CPI yesterday. That makes it quite likely that the indicator will hit estimates and therefore should have little impact on the market. For an update on the U.S. indicators coming out today, please watch my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.